What if I told you that everything you know about money is about to change? Right now, the very foundation of our financial world is shifting beneath our feet. Central banks are scrambling to stabilize skyrocketing debt. Inflation is eating away at savings, and the power of our traditional currencies is starting to crack. Just like in 1944 with Bretton Woods, and again in 1971, when the dollar left the gold standard, we're on the edge of another global reset, a financial transformation that will change how we earn, save, and even think about money. But what does this reset mean for you and your money? Will your savings lose value? Will cash become obsolete? And most importantly, how can you prepare for what's coming? Stay tuned, because in the next few minutes, we'll uncover the hidden forces driving this shift and what you need to do to stay one step ahead. And if you're ready to protect your future and gain insights like this, make sure to hit that like button and subscribe. So what exactly is a global monetary reset? Think of it as a financial reboot, a moment in history when the rules of money are rewritten, often in response to extreme economic stress. Take 1944, for example. World War II had left economies in shambles, and leaders gathered at Bretton Woods to set a new world order for money. They tied the world's major currencies to the US dollar, which itself was backed by gold. This gave everyone a clear financial structure to rebuild on. But then came 1971. The US faced its own financial crisis, and President Nixon made a dramatic move. He removed the dollar from the gold standard. The dollar was no longer backed by gold, but by the government's promise alone. And this changed everything. Since then, we've lived in a world of fiat currency, money backed by trust, not a tangible asset. Today, we're seeing similar signs. Central banks around the world are printing money at an unprecedented rate. Debt has ballooned to levels that seemed unimaginable just a decade ago, and inflation is chipping away at the value of our savings. These are not random events, they're signals, a sign that our current system may be reaching its limit. Central banks are even exploring digital currencies, which could give them more control over the economy and fundamentally change how we use and think about money. The big question is, what will this next reset look like, and how will it impact your life? Well, keep watching, because we're about to break down the forces pushing us toward this next chapter and show you what you can do to prepare. To understand why a reset seems almost inevitable, let's look at the forces driving us there. Forces that are shaking the foundation of the global financial system. First, let's talk about debt. Governments worldwide have taken on unprecedented levels of debt to keep their economies running. Right now, global debt is around $300 trillion, more than 3 times the size of the entire world economy. In other words, we owe more than we can ever realistically pay back. This isn't just an abstract number. When a system is built on borrowing, it's like building a skyscraper on quicksand. It can't support itself forever. Eventually, it collapses. And we're now seeing cracks as countries struggle to keep up with interest payments and make tough decisions about social programs and public spending. Next, inflation. Every year, your money buys you a little bit less. Recently, that little bit has become a lot. Inflation is eroding the purchasing power of traditional currencies around the world. In places like Argentina and Turkey, currencies have lost over 90% of their value in recent years, hitting the middle class the hardest. This is the silent tax on your wealth. The more money that's printed to handle debt and spending, the less value it holds. And for the average person, that means less power over their own financial future. Now enter the rise of Central Bank Digital Currencies, or CBDCs. Imagine if governments could have complete control over a currency, not just how much exists, but how it's spent, and even who can access it. CBDCs could allow central banks to set spending limits, monitor every transaction, and even penalize people directly through their wallets. For some, this sounds convenient. For others, it's concerning. With CBDCs, money becomes programmable and traceable, giving central banks unprecedented influence over the economy and our personal finances. This is not just an evolution, it's a redefinition of money itself. And that brings us to the final force driving this shift: the rise of alternative assets like cryptocurrency and gold. People are losing faith in fiat currency. They see traditional money losing value and are turning to assets they believe hold intrinsic worth. Gold, once the backbone of the global economy, is seen as a safe haven. Bitcoin and other cryptocurrencies offer an escape from government control, a decentralized option that some believe is the future of finance. As people flock to these assets, they're sending a clear message. They want a hedge, a way to protect their wealth from the next potential collapse. These forces, debt, inflation, digital currencies, and alternative assets, are converging, pushing the world toward a transformation. So what might this new world look like? And how can you navigate the storm? We'll explore that next. Now let's talk about the part that really hits home: how this reset could impact you, your savings, and your day-to-day life. First, your savings. If inflation continues to rise, your money in the bank loses purchasing power year after year. Imagine working hard, setting aside money, and watching it slowly become less valuable, buying you less and less each year. Now, let's consider investments. Stocks have traditionally been a go-to way to grow wealth, but if we're heading for a financial reset, the stock market could face significant volatility. In past resets, like in 2008, stocks plummeted, and many people lost big portions of their investments. During a reset, certain sectors might thrive, but others could struggle, meaning the rules of investing may be rewritten. So, for anyone with a retirement account, stocks, or a traditional portfolio, this reset could mean a complete reevaluation of what's safe and what's at risk. Now let's look at debt. Debt can be a useful tool, but in times of economic upheaval, it can also be a heavy burden. If a reset were to happen, interest rates could shift, making it harder and more expensive to keep up with loans and credit card payments. Imagine a situation where, overnight, the interest on your debt doubles. What once seemed manageable could suddenly be overwhelming. Some experts think a reset might even come with debt restructuring, which could change how and when you pay back what you owe. But that's out of your hands. It all depends on how governments handle the transition. And then there's the cost of living. When prices are rising faster than wages, everyday life gets harder. A reset could make the basics more expensive: food, gas, rent, all while wages struggle to keep up. For a lot of people, this means working harder just to maintain the same lifestyle, as the prices of goods and services outpace income. We're already seeing this play out in countries facing extreme inflation. A reset might bring similar challenges on a global scale. So, what does this mean for the average person? A financial reset could shake up the foundations of how we save, invest, and even make ends meet. It's not just a matter of high-level policy changes. It's a shift that could redefine your daily reality. But there's a silver lining. By understanding these changes, you can prepare for what's coming. In the next section, we'll look at how the future might unfold and the steps you can take now to secure your financial future. So, if a global reset is really on the horizon, what might the future look like? There are a few ways it could play out, each with very different impacts on our lives, our money, and the global economy. In one possible future, we see the world shift towards Central Bank Digital Currencies, or CBDCs, as the primary form of exchange. This would mean digital money issued directly by central banks, with every transaction recorded and monitored. It could spell the end of cash, as governments and banks push for a fully digital financial system. This kind of system could give central banks and governments more control, allowing them to adjust spending in real time, implement financial incentives or restrictions, and even track every dollar spent. While this might make the system more efficient and help control inflation, it also raises concerns about privacy and autonomy. Imagine a world where your access to funds could be limited or your spending adjusted based on economic needs. For some, it sounds efficient, but for others, it's a loss of financial freedom. And it's those without access to alternative assets or methods of exchange who might feel this the most. In an alternative future, we see the rise of decentralized finance. People are turning to assets like Bitcoin, Ethereum, and even precious metals like gold as stores of value that lie outside traditional financial systems. Here, cryptocurrencies and blockchain technology offer a way for people to hold and transfer value without relying on banks or central authorities. This movement is fueled by the idea that money should belong to the people, not be controlled by governments or financial institutions. Decentralized assets bring a sense of financial independence, giving people control over their money without the fear of intervention or tracking. But there's a catch. Decentralized assets can be highly volatile, and not everyone is comfortable with the risks involved in crypto. Those who've heavily invested in traditional assets like stocks, bonds, or cash may struggle if the system leans toward increased centralization with CBDCs. The value of traditional currency and certain investment types could face challenges under new digital rules, while those who diversified into assets like crypto and gold might find they're better protected. But make no mistake, this isn't a one-size-fits-all future. In the decentralized scenario, individuals who understand crypto and alternative investments will have an edge. Meanwhile, those who aren't comfortable with digital currency could find it harder to adapt as financial systems evolve. The reality is, we don't know exactly which scenario will unfold. But one thing is certain, change is coming. And understanding the possibilities is the first step to being prepared. In the next part, we'll talk about practical steps you can take right now to navigate this uncertain future and safeguard your finances. Now that we've explored the forces driving this reset and the possible futures we may face, it's time to focus on what you can do to protect yourself and your financial future. Let's dive into some key strategies to prepare. First, let's talk about diversification. In times of uncertainty, the old saying, "Don't put all your eggs in one basket," rings truer than ever. Assets like gold, real estate, and even cryptocurrency have historically shown resilience in volatile markets. Gold, for example, has been a store of value for thousands of years. When fiat currency loses value, gold often holds steady, protecting wealth. Real estate can also be a solid choice, offering the dual benefits of long-term appreciation and rental income. And while crypto is more volatile, it's increasingly seen as a hedge against inflation and central bank policies. By spreading your investments across these different assets, you're better equipped to withstand economic shifts and avoid having your wealth tied solely to traditional currency or stock markets. Second, financial literacy is no longer optional. It's essential. The more you understand about economics, inflation, and investing, the better positioned you are to make informed decisions. Knowing how to hedge against potential downturns, identifying safe haven assets, and understanding how money works are skills that will serve you for life. Start by studying financial basics and staying curious. The more you learn, the better equipped you'll be to navigate change and avoid being blindsided by sudden shifts. Next, let's talk about cash. Yes, inflation can reduce its value over time, but cash still holds a unique place in uncertain times. Having cash on hand provides you with flexibility, liquidity to cover emergencies or take advantage of new opportunities when they arise. Consider it a short-term safety net. Cash reserves can help you avoid going into debt during hard times and provide you with the option to make strategic investments when prices dip. Ideally, aim for a portion in cash for immediate needs and the rest in assets that can withstand inflation. Finally, stay informed. The financial landscape can shift overnight, so keeping up with global trends, market indicators, and central bank announcements is crucial. Following reliable sources on financial news and staying aware of changes gives you the power to adapt and adjust your strategy as needed. Think of it like checking the weather. Just as you'd prepare for a storm, knowing what's coming in the financial world lets you make the right moves to protect yourself. In a reset, those who stay informed and adapt quickly are often the ones who thrive. Change is coming, but with the right preparation, you can take control of your financial future. Remember to stay diversified, keep learning, hold on to cash reserves, and stay informed. And if you want more insights like these, don't forget to like, subscribe, and stay connected with us for future updates. We're standing at the edge of a financial transformation, one that could reshape the economy as we know it. Today, we explored the driving forces behind this potential reset, the impacts it could have on everyday life, and the steps you can take to protect yourself. But remember, preparing isn't about panic. It's about being proactive. Diversify your assets, stay informed, and keep cash on hand. These small steps today can make a world of difference tomorrow. Don't get left behind in this historic shift. Hit subscribe to stay updated with the latest insights on navigating these changes, and let us know in the comments. What steps are you taking to prepare for the future? We're all in this together.